This is Horizon's Middle East and Africa, our top stories this morning. Volatility in Chinese markets continues as measures to shore up the economy keep coming, the latest being a cut to the 1-year and 5-year prime lending rates. Israeli Prime Minister Benjamin Netanyahu has discussed the next attack on Iran with top security aides. That's after a Hezbollah drone exploded next to his private home on Saturday. Plus, consultancy giants like McKinsey and BCG are thriving in the Middle East, where governments are spending trillions on economic growth and deal-making. We get the details later this hour. It is just past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg in this week for Jumana Bersetchi, and it is a busy week. So let's just take a look at where markets are positioned ahead of the trading day on Monday. First of all, really, it's interesting to take a look at where U.S. futures are, because last week, we saw the S&P in particular notch its 6th straight week of gains right now, pointing towards a higher open later today. And the index on Friday hit its 47th record for the year. And this week, it is a busy week. There is a number of earnings that we're paying attention to, and we'll see how those reports affect the index. We're also paying close attention to the dollar right now. It's getting support both as a haven for geopolitical risks and also as U.S. economic strength flows into American risk assets. Important to note that the U.S. election is just 15 days away. Potentially, that has a focus on the U.S. currency, part of the reason why we're paying close attention to it. Also, if we look at oil right now, Brent crude is up just about 0.5%. But important to note that we saw crude slumping almost 8% last week, and we've seen crude really over the past few weeks in October have a volatile month caught between conflicting forces, in particular fundamentals, and also geopolitical risks. This is also a chart I'm paying very close attention to here in Johannesburg. EM assets right now trading with a bit of concern relative to developed markets. Initially, when we saw the Fed's easing commence, EM saw a bit of a bump, but that has really been eclipsed by the potential concern or the potential return of President Trump potentially. And then, of course, there's China weakness that's feeding into that. And let's just stick on China and Asia and take a look at how markets in Asia are faring. Avril Hong, of course, is standing by in our Singapore studio. Avril.
Yeah, Jen, we're seeing markets in Asia tracking some gains higher by a touch on the region's benchmark as investors weigh the health of both the American as well as the Chinese economy. And as you talked about a short while ago, we did get a loan prime rate cut. This came in at a bit of the higher end of expectations from China. And I think this was something that the central bank had already guided towards. But it also shows you what it's trying to do in terms of monetary stimulus. The key question is going to be whether this momentum that we're seeing on onshore stocks can be kept up as we're weeks ahead of the U.S. election. For now, it looks like it's going to be leaning more on monetary stimulus. For that, this is what we're seeing across the Asia Pacific, that outperformance of onshore stocks versus what we're seeing offshore on the Hang Seng as well. Jen.
Thanks so much, Avril Hong in Singapore. We'll check in with you later this hour. Let's turn back to the Middle East, though. Israeli Prime Minister Benjamin Netanyahu has held a series of meetings with top security aides to discuss an attack on Iran. That comes just a day after a Hezbollah drone penetrated Israel's air defenses and exploded next to Netanyahu's home. Meanwhile, Israel says it has launched a military operation targeting Hezbollah economic strongholds in Lebanon. Israel says the aim of the strike is to target Hezbollah's ability to function during the current war and later as it seeks to rebuild and rearm. The targets are believed to be throughout Lebanon, mainly in Beirut's southern suburbs and also the Bekaa Valley. For more on this, let's bring in Bloomberg's Paul Wallace, who is joining us now. He leads our MENA economy and government coverage. Paul, thanks for joining us. So what is the latest in terms of overnight developments and really how the events over the weekend are playing into what we're seeing now?
Hi, Jennifer. Well, there's been pretty heavy activity overnight in northern Gaza. Israel has continued its intense strikes in that part of the Palestinian territory. And as you mentioned, There are strikes throughout large parts of Lebanon again, including Beirut. And Israel has gone after a financial institution, a sort of bank-like institution that is linked heavily with Hezbollah and seems to be one of the key sort of funding tools that Hezbollah has. And that's something that's new. Israel saying it's going to go after that and hit the branches of this institution in yet another sign that it's deepening its push, not just to sort of move fighters away from the Lebanon-Israel border in southern Lebanon, but also degrade Hezbollah as an organization.
Well, and Paul, we're just a few days out from the death of Sinwar. Of course, we know that had an effect. We heard a number of global public leaders talking about that. I mean, how does that death last week potentially get us any closer to an end in sight for the war?
Well, that was obviously a hope for many Western powers and I think some Arab states as well, and the U.S. Both Joe Biden and Kamala Harris, they said they hoped that Sinwar's death would bring us closer to an end to the war in Gaza, but it doesn't seem like that so far. I think the key issue is the hostages, and now there's still around 100 that are being held by Hamas in Gaza. A lot of them, according to Israeli estimates, have been killed, but nonetheless, until Hamas shows some sign of being willing to release those hostages or Israel can retrieve them somehow, I think it will continue with this war on the group until it sees this group as no longer posing any military threat whatsoever towards Israel.
Paul Wallace in Dubai starting us off. Paul, thanks so much. Let's bring in Hasan Al-Hasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Hasan, thanks for being with us. Let's just pick up where Paul left off there. I mean, the hope and what we were hearing from a lot of global leaders is that the death of Sinwar potentially means a resolution is hopefully in the near term. What do you think that potentially did, though, to this conflict? I mean, how did that serve to potentially expedite a resolution or just put it on pause?
Yeah, theoretically, Sinwar's death could have provided Israel and the Netanyahu government with an off-ramp. It could have allowed them to say, we've accomplished our main objectives, we've taken out the leader of Hamas, Yahya Sinwar, and his predecessor as well, and many of Hamas's senior leadership, and mission accomplished. However, I think Israel has very clearly ruled out that scenario. Netanyahu has continued and has vowed to continue fighting until the very end. And so I think Israel's position has dashed the hopes that many had that that the death of Sinwar would at least lead to a ceasefire or lead to the end of the fighting, but that hasn't happened. Now, Hamas is still not out of the fight. It still retains some capabilities. Only yesterday, a senior Israeli military officer was killed in fighting in northern Gaza. And so Hamas retains the ability to put up resistance to Israel's presence in the Gaza Strip. It operates as an insurgent organization at the moment, composed of small autonomous cells. And so even if the top leader is killed, there still is a broad alignment among Hamas's various cells as to the existential nature of the war. They're essentially fighting for their survival. But when it comes to their tactical operations, these cells operate rather simultaneously. And so the absence of the leader at the top does not necessarily cripple that.
And Hasan, we heard Paul talking about really potentially Israel's next move is being guided by the hostages. I mean, would you agree with that, or do you have any indication really what Israel's next move is? Because we've been talking for quite a few weeks now about a retaliatory attack. I'm curious what your take is.
There are a few things on the table at the moment. There is obviously the question of how and when Israel decides to retaliate to the last round of Iranian missile and strikes on Israel. And that obviously is still very much on the table. That's a concern that continues to loom over everyone. The other question is how far Israel pushes in Lebanon. And so we've seen Israel now shift its targeting to Hezbollah's economic infrastructure. So it's targeting banks and financial institutions. And it has continued to target UNIFIL forces, UN peacekeeping forces in southern Lebanon, as it continues to attempt to establish a buffer zone along Lebanon's south. And so there is obviously also the question of the humanitarian impact of Israel's operations in northern Gaza. So I think Israel is visibly trying to depopulate northern Gaza, turn it into a buffer zone, including by compelling parts of the population that haven't yet moved south to do so under the threat of starvation and thirst. No aid has entered, or extremely little aid has entered into northern Gaza for weeks now. So hundreds of thousands are facing the dual threat of heavy bombardment and starvation. So all of these things on the table. I don't think that the issue of the hostages has been a top priority for the Israeli government. Netanyahu has had multiple opportunities to reach a deal, but has decided to undermine those prospects, either by taking out the people he was negotiating with or by escalating in a qualitative way. So I don't think the hostages are the guiding principle for Israel as to what comes next.
Who do you think potentially then steps in as a mediator, if anyone, to speak with Netanyahu?
Well, at the moment, the U.S. Is obviously the prime candidate. It's the only country that has the sufficient leverage and sway and influence to be able to do so. Israel depends in a vital manner on U.S. military and political aid. So without the U.S.'s support, Israel would not be able to fight for this long on so many different fronts, because the U.S. provides munitions, it provides intelligence, it provides political cover at the United Nations. The issue is that the Biden administration has not been willing to exploit the full breadth of its leverage, truly, to bring Israel to comply with international law, to prevent or at least hold Israel to account for the many war crimes that it is committing, and to press Israel for a clearer definition of what its strategic goals and objectives are, and obviously to pay more heed and attention to the massive civilian toll that its war effort has so far cost. So I think the U.S. is the only country that's able to bring any pressure to bear on Israel, but I think the Biden administration's track record in doing so has unfortunately been quite underwhelming.
Not to mention the election coming up in just a few weeks. Hasan Al-Hasan, appreciate your insights this morning. Middle East Policy Senior Fellow at the International Institute for Strategic Studies. Thanks so much. All right, still ahead, Emirates NBD explains why they don't see a recession for 2024 as the Fed attempts to navigate a soft landing. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajah in Johannesburg. The global economy is heading toward year-end with unexpected tailwinds as slowing inflation clears the path for a soft landing. Meanwhile, bond markets are forecasting resilient growth and ruling out recession risks. Emirates NBD says employment remains their foremost indicator, and with a strong labor market, they do not see a chance of recession. Let's bring in Satyajit Singh, the firm's fixed income strategy head. Satyajit's joining us from Dubai. So, Satyajit, is it all clear? Are we in the clear now? Is that really what you and your firm believe at this point in time?
That's very interesting, because in the last 30 years, if you look at the Fed rate cut cycles, there has been only two instances where the yields have actually stayed low after the first rate cut, after the 12-month period. That is, again, 2008 and 2019. And in both of those cases, employment was the lead indicator for yields to go down. With employment remaining strong and bear steepening happening, I don't think the bond market is discounting any kind of recession risk. I won't say that we are in all clear, but employment, as you mentioned, is a foremost indicator to understand any kind of weakness in the U.S. Macroeconomic situation at the moment.
What are potentially the headwinds, though, that markets maybe are not factoring in? We talked about how the U.S. election is just about 2 weeks away. I mean, is that the biggest real question mark here in any sort of continued economic strength? Excuse me.
Absolutely. I mean, U.S. election probably are the biggest event for the bond markets in the coming weeks. I mean, if either candidate wins, probably we'll see a bear steepening in the curve, with the long end going up, with deficits expected to be higher. But what matters more for the bond market is that we should have a clear winner rather than any kind of dispute on the election results. That's when you will see a lot of volatility, especially with the MOVE index remaining above 115 at the moment.
Where are you seeing the clear winner outside of the U.S.?
I mean, outside the U.S., if you see the bond markets, we continue to love emerging market high yield in terms of the yield that we're getting. Similarly, we love GCC quasi-sovereigns. We also like some of the Turkish bank subordinated debt and LATAM, miners as well as oil and gas exporters. That's where we see in emerging market, we see a lot of value. Within the developed market, again, European cocos provide you some kind of yield pickup. But apart from that, you see spreads are definitely tight. And with the Q3 earnings, I think a strong earnings season is a prereq for spreads to remain tight.
Well, and Satyajit, I just want to stick on EM in particular, because we were pointing to a chart earlier in the show about how EM assets are still trading defensively despite the Fed easing cycle commencing. I mean, do you think that is because of China?
Even before actually China started its stimulus spree, we had seen emerging market assets actually start to do well. We had removed our underweight to emerging market debt in the middle of this year, and since then it has performed spectacularly well. I think strong US macro data is one of the tailwinds. Obviously, China adds to the stimulus there in terms of sentiment. So these are the two tailwinds for emerging markets debt. Yeah, the only headwind I see is the level of spreads. They have never been this tight during the starting of rate cut cycle. So we'll see how the total returns in the next 12 months pan out.
Do you think the spreads, though, continue to widen? I mean, this chart again on the screen is showing that EM is trailing the U.S. equities. I mean, do you anticipate this to continue?
Not an equity expert, but I think at some point of time we will see emerging market equities emerge because of the valuations, especially. And if China's stimulus, especially the fiscal stimulus, if it comes through, then we would see another leg of up in China markets and consequently in emerging market, other markets as well.
All right, we'll leave it there. Satyajit Singh, fixed income strategy head at Emirates NBD, joining us in our Dubai studio. Thanks so much for your insights this morning. All right, coming up, JPMorgan expects a revival in South African stock listings amid rising investor interest. More on why this is happening next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. JPMorgan is expecting a surge in IPOs and fundraising activity in South Africa as soon as next year. The U.S. investment bank sees the economy turning a corner after years of lackluster growth. Let's bring in Bloomberg's equities reporter, Kuleko Siwile, who is joining me in studio right now. So, Kuleko, thanks for here. So why the expectation for an IPO surge? This is welcome news, I think, for the economy.
It is, Jen, and good morning. So the first reason I can think of is there's been a lot of positive sentiment around the government of national unity coming in. Secondly, we haven't seen power cuts, which have been a very big strain on the economy for a while now. And we haven't seen any for the past 6 months or so, yeah.
So then, I mean, that is positive, Kuleko, but I mean, that comes after years of a bit of downturn in terms of South African equities. I mean, can you talk about what we have seen over the past few years and how that really compares to what is happening now?
So I'll take you back a bit. In 2017, 2018, we see a lot of pickup in the IPO space, and that's because of talks of Cyril Ramaphosa coming in as president. And that was in a way, very business friendly. And we see some similarities now where the government of national unity is coming into play. And it's not just the ANC that's making decisions, but we've got other parties that are part of the bigger South African pictures. And I think investors like that story. And like you said, it's an expectation that we're going to see the surge in IPOs. It hasn't happened yet. And I think we're seeing a lot of international investors saying, we've heard the promises being made before, but what we want to see now is implementation. So I think over the next few months, we'll see the government, and not just that, but some private partnership with the government where we'll see where the surge will happen from there.
Yeah. And then, so then what does this mean in terms of IPOs? I mean, what is the expectation in terms of what sectors in particular we should be looking at?
I don't think it's any sector specifically, but there's going to be a push in the infrastructure space. So we might see a sector like construction that has gone down from about 13 companies listed in the 2000s to only 3 now. We might see sectors like that see some sort of recovery. The IPOs that we've seen over the past couple of months have been in the retail space. We're expecting a Pick n Pay IPO before the end, a Boxer IPO before the end of this year, where Pick n Pay is unbundling their lower income supermarket business.
And Kuleko, before we let you go, we saw Jamie Dimon. He's been in the region. I mean, what does JPM being in the region look like for him? What has he said?
So he's basically expecting a lot of activity in Africa. There's a lot of space for growth. So JPMorgan wants to be a part of that story moving into the next generation.
All right. Bloomberg's equities reporter Kuleko Siwile joining us here in studio. Kuleko, thanks so much for your reporting there. Coming up, some key tech names are reporting earnings this week. Today's highlight will be results from software company SAP. We have the analysis next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Volatility in Chinese markets continues as measures to shore up the economy keep coming, the latest being a cut to the 1-year and 5-year prime lending rates. Israeli Prime Minister Benjamin Netanyahu has discussed the next attacks on Iran with top security aides. That's after a Hezbollah drone exploded next to his private home on Saturday. Plus, consultancy giants like McKinsey and BCG are thriving in the Middle East, where governments are spending trillions on economic growth and deal making. We have the details later this hour. It is just gone 8:30 a.m. across the Emirates, 6:30 a.m. in South Africa, where I am. I am Jennifer Zabasaja in Johannesburg in this week for Jumana Bersachi. And it is a busy week, so let's get to where markets are positioned ahead of the trading day. And in particular, I'm looking closely at U.S. futures because U.S. futures are coming off of another strong week. The sixth straight week of gains is what the equities saw last week. Friday, the S&P 500 hit its 47th record for the year. It is a busy week, though, for earnings. We'll see how continued reports from some of the biggest companies, of course, affect a number of these indices. We're also paying close attention to the dollar. As you can see here, it is getting support both. It's slightly in the red right now, but it is getting support as both a haven from geopolitical risks and also as U.S. economic strength drives flows into American risk assets. A lot of currency, of course, or a lot of focus, on the U.S. currency with the U.S. election just 15 days out. And oil up slightly today, just about 0.5%, but that is coming after slumping almost 8% last week. Crude, of course, has had a pretty volatile October with the market caught between two conflicting forces pointing to lower prices and also geopolitical risks. But I want you to pay close attention to this chart right here. This is a chart right now on the options price and greater yuan volatility offshore. We are going to have Avril talk a little bit more about this as we dig into EMs in particular. And so let's go to Avril then. She is standing by in our Singapore studio. Hey, Avril.
Yeah, sure thing, Jen. I'll talk more about what we're seeing in the options market, but also raking through today how China banks providing a bit of monetary support, I guess, for the economy by cutting the 1-year, 5-year loan prime rates. This is something that the PBOC governor had more or less guided towards, but it did come in on the upper end of the range, 25 basis point cut. To some, this is a measure in order to stabilize the property market. To others, that greater than expected cut represents how we are seeing potentially this confirmation of a quicker pace of easing from China. So this is what we're seeing in terms of stock markets, the CSI 300 outperformance looking pretty mixed elsewhere in the region. But let's take a closer look, because even as we keep an eye on the stock market, as you see there, the Chinese currency has been pretty range bound today. And if you look at what we're seeing and the options market in terms of implied volatility, I mean, you just showed this chart a short while ago, but it tells you how traders seem to be positioning ahead of the US election. And just based on what they're seeing potentially on the onshore yuan, that's where they see lower volatility. Maybe this tells us how traders expect the PBOC to keep yuan fluctuations in check in time to come. So something to keep an eye on as well as we keep an eye on these China market moves, Jen.
Thanks so much, Avril Hong in Singapore for us. Let's turn it back to the Middle East. A day after a Hezbollah drone penetrated Israel's air defenses and exploded next to the private home of Prime Minister Benjamin Netanyahu, he held a series of meetings with top security aides to discuss the next attack on Iran. Meanwhile, Israel's military is taking aim at Hezbollah's financial arm. It issued evacuation warnings to civilians as it sought to hit targets associated with the Al-Qard Al-Hasan Association. The unit serves as Hezbollah's alternative banking system and allows the Iran-backed group to function. For more on this, Bloomberg's Galit Altstein joins us now from Tel Aviv. So, Galit, thanks for being with us. Let's just start with the overnight attack in Lebanon. What is notable about this, especially as we see a lot of skirmishes that have been happening over the past month or so?
Yes. So, as you said, Jennifer, Israel overnight launched an attack that is slightly different than what we've seen so far, as it was said to be solely aimed at Hezbollah's economic strongholds in multiple locations across Lebanon after civilians were issued evacuation orders in over 20 locations. So at the center of this attack was the Al-Qard Al-Hasan Association, which is in essence Hezbollah's banking system. It's an alternative banking system that is disconnected from the international banking system, from the SWIFT system, and it does allow the transfer of large portions of Hezbollah's monthly $50 million allowance that comes in from Iran to enter Lebanon. It goes mainly through Syria and then through this banking system. And according to the Israeli military, the aim of this overnight strike was to do several things. One, to disrupt the flow of money, both here and now, as Hezbollah has large war expenses, obviously, but also looking forward to prevent the organization from rearming and rebuilding itself in the day after the war. It is also notable that this banking system is used by some 300,000 Lebanese Shiites. So the IDF, the Israeli military, was also aiming to sort of breach the trust of these civilians who also use this system, breach the trust between them and Hezbollah and its institutions.
And Galit, we were speaking earlier with one of our guests about the U.S. potentially being the only mediator to potentially help in this ongoing conflict. We'll see U.S. Secretary of State Antony Blinken back in the region in the coming days. I mean, what, if anything, do you expect him to accomplish?
Yeah, so we'll be seeing two U.S. officials coming into the region over the next few days. Israeli media is reporting that Special Envoy Amos Hochstein is also expected in the region, and then he will be followed by U.S. Secretary of State Antony Blinken. They will be discussing prospects of a ceasefire both in Gaza and in Lebanon. In Lebanon, that will be expected to be part of an agreement that will see Hezbollah retreat tens of kilometers into Lebanon away from the border with Israel, something that is similar to previous UN Resolution 1701. Now, this is very initial, so we still can't say what results this can yield at this point in time. We can say that the Israeli military continues to conduct its targeted ground strikes in villages that are adjacent to the border to dismantle Hezbollah and its Radwan force from what they say are launch pads that were meant to facilitate attacks into Israel at some point. We're seeing Hezbollah launch projectiles, missiles, rockets, drones at Israel. The speed has ramped up over the several days, and the average is about 200 projectiles that are being launched at Israel on a daily basis. Right. Whether Hezbollah will agree to hold its fire at this point, we still don't know, but some talks are expected on.
Bloomberg's Galit Altstein in Tel Aviv. Galit, thanks so much for your reporting and for joining us this morning. Now, let's shift and turn our focus to tech and some key industry names that are reporting this week. Today's highlight will be results from software company SAP, which last week overtook ASML as Europe's most valuable tech firm. Joining us now is Mark Moerdler. He is a senior research analyst at Bernstein Global Software. So, Mark, there's a lot to get to. There's a raft of earnings we are paying close attention until the end of October. But what's really notable is how ASML last week had an impact on overall sentiment with AI in the tech industry. I wonder, if we take a step back, what do you think those results potentially showed?
We're in the early stages of generative AI. I did my PhD, what feels like 100 years ago, in AI. It's been permeating tech for a long time. But generative AI really exploded on the scene, and everyone expected it to be a big business really quickly and to drive a big tailwind to the software space. The reality is it's taking a lot longer. And so what you're starting to see is the incremental reality set in, but you're also starting to see the value being created from AI. But again, it's still early days, and people are at times too over-optimistic and too pessimistic, which is not normal when you have an emerging tech such as what we see with generative AI.
So then we have a report out on Bloomberg right now saying that there will be some clear winners in the AI space right now. And again, ASML's results potentially show that. Where do you think the chasm is then? I mean, what companies do you think will end up on top at this point in time?
So within software, which is my coverage, I believe Microsoft will be a winner. You're seeing it sprinkled through the whole business. You're seeing it very visibly within their Azure business. You're going to see a lot more of it. It's going to take time, but you're already starting to see the value. And they're probably the best positioned software company in the world in terms of AI. Adobe's another one. They had a conference last week. They talked about incremental capabilities. It's going to take some time for the adoption to grow, but you're already seeing and hearing about the incredible new capabilities, their ability to change the way in which you create content. And so Adobe's another one we believe is going to be winners. We're watching Oracle, we're watching SAP, we're watching Workday, because they're all starting to come out with interesting capabilities. The question is how well and how effectively they will directly monetize by selling AI, or do they simply use it to drive increased adoption of the core product?
Do you have an expectation then for SAP today?
Look, SAP has executed very well. They're in a cloud transition. Their story is cloud transition. AI may be a tailwind to it, but it is a nominal tailwind at this point. And so what they're literally doing is moving their existing customers that have run software on premise for 20, 30 years to the cloud, and that generates more revenue for SAP. And it saves costs for the client. They don't have to pay for hardware. They don't have to pay for internal and external IT services. And they can close their books. They can run their operations much better. And so that execution is continuing. They're also picking up new customers. They're selling and cross-selling new capabilities to it. So I think we're going to have a good quarter. I think you're going to see them reiterate their guidance for the full year. You're going to start to hear them talking more about the future. They put out longer-term targets. I think they're extremely well positioned. I think they'll continue to defy a lot of the street. And the reason is because they're in the right position in a early transition market that's early in its transition to the cloud. A lot of software is in markets that's already transitioned to the cloud. And so I think the setup for SAP is good. It's execution, drive revenue growth, and manage the cost structure. Cut excessive costs while driving operating leverage within the business. So you'll see a beat, we believe, on the margin side. You'll see a beat on the revenue side. And that margin beat is probably going to surprise more than the revenue beat will.
All right, we'll see whether that pans out. Mark Moerdler, Senior Research Analyst at Bernstein Global Software. Thanks, Mark, for joining us this morning and for giving us those insights. Let's pivot now to crude. Crude has had a volatile trade over the past month around the worries around the Middle East conflict, but other pressures are also keeping prices within a narrow range, well below the historic highs of more than $100 a barrel, including China's weak economy. Earlier on Bloomberg Insight, Haslinda Amin spoke to IEA Executive Director Fatih Birol on the outlook for the oil industry. Take a listen.
This year, global oil demand is very weak, much weaker than previous years, and we expect this will continue because of one word, China. China, in the last 10 years, was responsible more than 60% of global oil demand growth. China was a very strong economy, and China is slowing down China's economy. Therefore, China needs less oil.
Has oil demand peaked? I mean, we used to see about, what, 2 million barrels a day?
Exactly.
Are those days over?
I think these days are over. There may be ups and downs, but in general, we think global oil demand will peak before 2030. Again, China is a big driver of this global oil demand growth. China was the engine of the global oil demand growth, and this engine switches to electricity now. Therefore, we expect that the global oil demand will be weak, and before 2030 it will peak. But afterwards, we still need oil, of course.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Recent research suggests the global consulting industry could be heading for a slowdown, growing only 3% last year to $250 billion. But the Middle East is bucking the trend. Source Global Research says the region's $5.4 billion consulting industry grew by 13% in 2023. For more on what's driving the surge, let's bring in Middle East economics reporter Abir Abu Omar, who is joining us in studio there in Dubai. So, Abir, what is behind the consulting boom in the Gulf?
Good morning, Jen. I mean, as you mentioned in the first sentence when you introduced this, the consulting industry in the Gulf, this includes Saudi Arabia, the UAE, Kuwait, and the rest of the GCC nations. So that is growing 4 times more than 3% that is expected for the global average. Now, that's obviously against a backdrop of what is happening in the region in terms of, the wider Middle East and hostilities between Iran and Israel and Lebanon now. But what we have seen doing this story is we've done interviews with a bunch of executives based in some of the largest consulting firms in the world. And essentially what we know is, for example, for both McKinsey and BCG, both of them have accelerated the numbers of employees in the region since the pandemic. We know that both of these companies now have more than 1,000 employees each. Most of this business is attributed, obviously, to work with governments in the region, namely the Saudi government, which is spending billions and billions of dollars into projects, including NEOM, including the line, including some of the biggest projects that we're seeing in the capital, Riyadh. So we're seeing that the need for consultants in this region is still very much key to those governments. And I mean, it shows from the numbers, right? We know, again, from interviews with some of our sources that profitability in the region is among the highest in the world for some of those biggest consulting groups.
So how sustainable then, Abir, is this boom? I mean, given a number of other factors that are really affecting the region right now and on a lot of people's minds.
Yeah, so I mean, look, the most obvious thing is the regional instability. There's a lot of volatility happening in the region. That includes, again, the war, the Hamas-Israel war. So far, again, from conversations we've had with some of the executives in these firms, they're telling us the impact hasn't been caught yet in the Gulf region, but that's definitely something that's on the back of people's minds. The other thing is the majority of the work with these consultants is now happening in Saudi Arabia, and we know that Saudi Arabia is paring back its spending consecutively now for 2 years. We just had the Saudi pre-budget statement last month, and we know that Saudi is paring back some of its spending, projecting budget deficits for further years to come. And most importantly, Jen, Saudi Arabia slashed its economic growth projection from about 4% to just under 1% this year. So that's bound to have an impact on the work of external parties, including those consultants. But so far, we're not seeing that impact on consultants. Things seem to be going very good for them. But that's just something to bear in mind for the medium term.
Yeah, it is good on the one hand. Abir Abu Omar, Bloomberg's Middle East economics reporter, thanks so much. And you can take a look at Abir's story right now on the terminal. And for more of these stories looking into the intersection of wealth and power in the region, do sign up for our Mideast Money newsletter on Bloomberg.com. Now, for a look at some other stories we're following this morning. Russian President Vladimir Putin has hosted the UAE's ruler, Sheikh Mohammed bin Zayed Al Nahyan, for an informal dinner at his residence ahead of official talks today. Putin used the occasion to talk up bilateral ties, highlighting how trade has tripled between the nations in the last 3 years, reaching $7 billion. Talks today will include discussions on Ukraine and the situation in the Middle East. MBZ will also attend the BRICS summit on Tuesday. Saudi Arabia-based United Electronics, known as Extra, is set to go ahead with a listing in Riyadh of a 30% stake in the financial services unit. 7.5 million shares will be floated in the subsidiary, which owns Tashil Finance, a company that provides credit financing to the electronics company retail customers. It's the latest deal in the kingdom's booming IPO market, which has seen over $15 billion in share sales this year. Now, coming up, Boeing workers are set to vote on an unprecedented 35% wage increase later this month. We have the details on that next. Stick with us. This is Bloomberg. Boeing and the union representing 33,000 striking workers have reached a tentative agreement on a new contract. The union will vote to ratify the agreement this Wednesday, just as the struggling plane maker reports earnings. Let's bring in aviation reporter Danny Lee, who has been following this story from the beginning. So, Danny, how did we get to this sudden agreement over the weekend, and how significant is this vote on Wednesday, especially considering that the company is already having a big Wednesday considering its earnings?
Yeah, I mean, this unexpected agreement, a tentative agreement between Boeing and its union, only came to pass because the Biden administration has had to get involved. Acting Labour Secretary Julie Su has been in Seattle to try and get both sides to come to some kind of agreement, to get some kind of agreement that will allow this vote to take place. And what we have now is a potential 35% pay rise over 4 years. The one key thing is it's not the 40% that the unions have already been looking for in the past, and there's been no move on pension changes that the unions want. So this is still a big step forward, given these more than 5 weeks of disagreements and bickering and tensions, which is a big strain on Boeing financially. So it is really quite significant.
So then, Danny, considering that, what you just said, and some of the demands not necessarily being a part of this package, I mean, what are the prospects of this vote actually passing?
It's really hard to tell at this point, because over the intervening weeks, the fact that Boeing has come back with improved offers, which are still well short of what the union wants, it has lit a real fire under the base of the rank and file of the 33,000 workers. So whilst this vote does need a simple majority, it just adds to that extra tension and dilemma of, in case this vote does not pass, and it puts a even worse of a bad outlook on the earnings, which will take place on Wednesday. So clearly for Boeing, it's got the cash war chest it does need for the future, but it does really need to see this strike end.
And Danny, I mean, what do you think then this means for Boeing, maybe in just 30 seconds?
Yeah, I think for Boeing that this is a big step forward, the fact it has been able to put forward a new offer, well, the union at least. But still the outlook for its customers who are not receiving the planes that they want, the impact that has on exports, on the global aviation industry. Clearly, this is a pressing time for Boeing and for new CEO Kelly Ottberg.
For a big week. And for our aviation reporter, Danny Lee. Danny, thanks so much for joining us in Hong Kong and for that report. All right, that's Horizons Middle East and Africa today. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.